Welcome to the Ratio Professor. This is our online course on finance. This is Topic 1, Introduction to Finance, and Lesson 1, What is Finance? I am Professor Jeff Jewell. So what exactly is finance? Well, there's lots of ways we can define finance, but one good definition is that finance is the study of how to make good decisions that involve money. Obviously, there are many types of business decisions that involve money. A few examples of the types of decisions finance cares about is what assets should the firm buy? Or how should we pay for the assets we want to buy? Or even mundane decisions like how much cash should the firm keep on hand? Another way we can think about finance is that finance is the study of risk and return. These are what I like to call the two pillars of finance. They are foundational concepts that almost everything in finance revolves around. So we'll be spending a lot of time in this course trying to measure risk and measure return and understand exactly how risk and return should affect all of our decision making. Another way we can think about finance is to think about the two primary functions of finance. Finance doesn't really have strictly defined functions. Like in financial accounting, you may say the function is to prepare financial statements. But at least in general terms, the functions of finance are analysis and decision making. So we're going to be analyzing problems that involve a monetary component and then trying to make good decisions on these problems that involve a monetary component. There are many ways we might try to organize finance into various areas. One simple way we can do this is to divide finance into about 5 different subjects. So the first is corporate finance, closely related to business finance or managerial finance. Those are very near synonyms for each other. That's all about how the firm should make good financial decisions. Then we have personal finance. Obviously, this is about how the individual should make good financial decisions. So this would include things like personal budgeting, financial planning, and estate planning. Then we have investments and portfolio management. This is all about how we should make good decisions involving financial investments, things like common stocks, preferred stocks, bonds, etc. So we want to understand the best way to select those investments and then how to combine them into a portfolio that has attractive risk and return characteristics. Then we have financial markets and institutions. This is a very broad area that overlaps a lot with macroeconomics. It's about how financial markets should be organized and how financial institutions should be managed in such a way that they provide the most benefit for an economy. And finally, we have public finance. This is an area that's a little bit different from the others because it's related to government. So it's about taxes, spending, balancing the budget, and financing public debt. This course will focus on business finance. It turns out that business finance has quite a bit of overlap with accounting and economics. So as we're teaching this online course, we're going to assume that you understand some basic accounting concepts. We'll assume that you understand some basic economic concepts. We will be doing brief refreshers on the most important accounting and economic concepts that relate to finance. And we'll also be covering a little bit of information on financial markets and some investment topics. Some specific areas of study that we'll explore in this course are financial analysis. You might know that by the name financial statement analysis or performance evaluation. That's all about really digging into the firm's current financial results and trying to understand them. So understanding what the firm's doing well, what the firm's doing poorly, where it needs to improve, etc. Financial forecasting is about projecting results into the future. So it's all about what-if analysis. If the firm makes a certain investment today, how will that affect the firm in the future? How will it affect the income statement, the balance sheet, the firm's cash flows, etc. Time value of money is the concept that $1 today is not the same as $1 next year or $1 10 years from now. This is one of the most foundational concepts in finance, and it's going to inform a wide variety of our analysis. We'll be doing a brief overview of stocks and the stock market and trying to figure out the factors that affect the value of a stock, and we'll be doing the same for the bond market. Then we'll be exploring capital budgeting. That is the process by which the firm makes its asset selection decisions. And finally, we'll explore some topics related to capital structure, which is trying to understand how the firm should finance itself. So how much debt should the firm have versus how much equity, how much long-term debt versus how much short-term debt, etc. So this has been a brief introduction to finance. Hopefully this has whetted your appetite and made you thirsty for more information. This will be a complete online course, so we'll be exploring lots of topics in the future. Hopefully you'll come back for some future installments. Thank you for joining us.